Hello wealthy people, in this video I have reviewed the Quant multi-asset mutual fund which has given the highest returns to the investor and is also ranked as the #1 mutual fund by the Economic Times in the multi-asset category. I have covered the 5 following points which will help you evaluate the fund performance. The points are asset or the fund allocation, returns delivered in the past, comparing those returns with other mutual funds in the category, 4 good things that I personally like about this mutual fund, 1 thing that I believe could be a cause of concern. So without wasting any time, let's move to the point number 1. Being a multi-asset category mutual fund, it has invested into 3 different asset classes. The majority of the investment is in the equity where they have invested 56.56%. The second majority of the investment is made in the commodities and the remaining investment is in the debt which is close to 8.62%. These are the sector-wise allocation of this fund. The top 3 sectors are energy, healthcare and construction. When we take a look at the companies that this mutual fund has invested into, you will find that the top 5 companies are all from the different sectors, which is really a good diversification strategy according to me. Let us now take a look at the commodities in which they have invested. The major investment is in the gold ETF followed by the silver ETF. The 8.62% debt investment is made in the government securities and the treasury bills. Let's move to the point number 2 and try to understand what returns this mutual fund has given in the past. This is the past performance graph of the Quant multi-asset mutual fund along with the benchmark index and the average of the multi-asset category. In the 1 year, this mutual fund has given good returns. As of the date of making this video, you can clearly see that it has given the highest returns among the all. When we switch to 3-year returns, you will clearly see that this mutual fund has outperformed the benchmark and the category average by a margin. The same is the story for the 5-year period. Initially, it was giving a good performance in line with the benchmark and the category average. But after July 2020, it started outperforming the benchmark and the category average by a margin and it is nowhere comparable to them. Let us now try to understand what these returns look like in numbers term. For all the periods that are mentioned here, you can clearly see that the Quant multi-asset mutual fund has outperformed the benchmark index and the average of the multi-asset category mutual fund. The beauty lies in the longer time period horizon. You can clearly see that in the 3-year, this mutual fund has given almost 2 times returns of what the category average is. For 5-year, again, it has given close to 90% more returns than the category average. In 7 years, it has given almost 70% more returns than the category average. And in the 10-year, it has given almost 45% more returns than the category average. Let us now compare this mutual fund in the point number 3. Again, this is a quick comparison and not a very super detailed comparison. If you want a super detailed comparison of Quant multi-asset mutual fund, then you can drop a comment and I will make a video for you. I have compared the Quant multi-asset mutual fund with other 2 best performing mutual fund in the multi-asset category, which is ICICI Prudential multi-asset and the HDFC multi-asset DN. For all the periods that you see on the screen, you will clearly see that the Quant multi-asset mutual fund has outperformed the ICICI and HDFC multi-asset mutual fund, except for the one period that I have highlighted here where ICICI has given better returns compared to Quant and HDFC. But again, it is only for the one period where ICICI multi-asset has beaten the Quant multi-asset. If you take a look at the 5-year returns, you will be amazed to see that these funds are nowhere close to Quant multi-asset fund. Let us now take a look at the good things about this mutual fund. The first good thing is obviously returns. This fund has delivered some exceptional returns compared to all the other mutual funds. That's the #1 reason why I like it. The second good thing that I like about this mutual fund is the expense ratio, which is really low compared to other mutual funds. The expense ratio is only 0.60%, which is very less compared to other mutual funds that charge in this category. For example, ICICI charges 1% as an expense ratio. The third thing that I really like about this mutual fund is the exit load. As you can see on the screen, the exit load is 1 if you redeem your investment only within 15 days. So after 15 days, if you want to redeem your investment, you will have to pay 0 exit load. So you can withdraw the investment whenever you want. Some of the other mutual funds in the category, they are charging you 1% exit load for 365 days. So if you withdraw within 1 year, you have to pay 1% of the total withdrawal amount. The fourth thing that I like about this mutual fund is how well diversified it is. And the fifth thing that I like about this mutual fund is the age of the fund. It is a more than 10 years old fund, which I personally like. Now let's talk about the one thing that I believe could be a cause of concern. When we take a look at the riskometer, which determines the risk factor of the mutual fund, you will find that it is rated as a very high risky fund. So that's the only point that I believe is a cause of concern for me. But again, it is not a negative point because if you take a look at other mutual funds that invest into equity, you will find that those mutual mutual fund are also categorized as very high risky fund. Now there is also a bonus point that I want to let you know. I had personally invested in this mutual fund 2 years back, and I have earned more than 40% return in less than 2 years. If you want to watch the video, then the link will be in the description and in the comment section. For more such videos, you can subscribe to